Ladies and gentlemen, fellow traders, good to see you again. Well, I can't see you, you can see me, but all the same, good to have you back. You are here for another live show, our first live show of 2026, and we're getting ahead. We're going for it. This is going to be a big year. You're going to make loads of dosh. Today, we're going to talk about support and resistance. We're going to go into the support and resistance factor, and we're going to go into a little bit more detail on it, particularly on the entries and exits and how to find your support and resistance. So we're going to go over that in quite a lot of detail today. After years in the markets, I realized there's only one way to trade, and that's with one system, one simple, easy system, not trading with hundreds of different systems and going insane with all these indicators and having millions of computer screens all over the wall and tons of indicators. That's absolutely nuts. We don't want to do that. We don't want to go there effectively. So what I'm going to go into detail today is the simple way of just taking your trades. But also, we have to understand you've got to separate the system from the strategy, and that's something we've got to discuss as well. But we're going to discuss that at length throughout the year in all the different videos. Made my screen a little bit bigger for the start of the video. I'm going to make it smaller so that I disappear into the middle. And we've also got the straight up stream going as well for those that want to use it that way or are just watching on their phones or whatever the case. Trying that out this year, and we'll see how we go. Should be an interesting year on how the markets go. It was an interesting 2025. There was a lot of traders that actually struggled last year. They struggled immensely. They had a really tough time. Don't forget, ladies and gentlemen, trading is risky. Did you know that more than 75% of traders do lose money? And if you don't like losing money and you don't like risk, you probably shouldn't be trading. And you know, if you're day trading, if you're on the 5-minute charts, it's even more insane and even worse than that. So if you're not into losing money, then you're probably in the wrong game. You probably should be doing something completely different. If you don't like waffling, then you don't want to watch a trading live show with Rob, because I kind of waffle a lot. I kind of talk about trading a lot, and I talk about a whole bunch of things. But for those of you who know me, you'll know that I'm Rob, and we waffle through and we talk about trading. So I'll get into the trading in a moment. I'll get into talking about support and resistance, but let's just go over one or two small things before we get there and before everybody else gets here, because this is quite an early show in comparison to what I normally used to do on Thursday. I used to do the Thursday show at 2 o'clock or 1400 GMT plus 2, but I've moved that back to 12 o'clock GMT plus 2. And I'm doing this one at 1100 GMT plus 2 because we get more of the European market. And it seemed to be more successful last year, and people enjoyed it more. This is the Dixie. This is the US dollar index. Hey, hello, Luigi. Good to see you. Well, I can't see you. Good to see me, and good to see you on the chat. And Happy New Year to everyone. Yes, absolutely. I hope you all had a wonderful Christmas and a fantastic New Year. I hope it was a good one. And I hope you all made lots of good New Year's resolutions. If you've got a New Year's resolution, let us know in the chat. Tell us what it's all about. Tell us what the New Year's resolution is for this year. It'll be interesting to know. Yeah, mine is just to behave myself. That's all. I'll try. I'll do my absolute utmost. Actually, I never do New Year's resolutions. Not good for the health. But look at this, this dollar index here. Very interesting, isn't it? It really has come down quite hard and hit kind of major lows. This is what's obviously affected the US dollar South African rand, because who would believe that the South African rand would be so strong in comparison to the US dollar? But it's not. It's actually just this US dollar has taken quite a major dip and come all the way down into these lower levels, which is causing some effect. But I'm back into the VIX again for the new year, and I'm looking at the VIX. Nice trade at these levels. Always trade into the VIX at these levels, because it's going to sit at these levels for a long time. But every once in a while, you're going to get this insane spike over here. The only problem is I put my take profit at this level, and you have to monitor it very quickly, because otherwise it gets taken out too early. So you want to on the day sort of push that away and just monitor it and see how far it goes. I just leave it there in case I'm not looking and it spikes through it and I just get an insane profit. That's why I leave it there. But this gets left in for a really long period of time. You just leave it there and hope for the best. So that's your VIX. If you've got the ability to trade it, trade it. It's fantastic. It'll always make you money. US dollar, Japanese yen. As far as I'm concerned, this should be short, but it is kind of sitting in the middle here and not going anywhere. But we'll talk about support and resistance in a moment when everybody's here, and we'll sort of get into it and start going insane with the training, let's say. The S&P 500. The S&P 500 is very much just hanging around by this resistance. It doesn't seem to want to push through, seems to be hanging on. So we'll have to see how that's going to go and if it's going to go through or not. It is Coffee with Rob, so we might as well have some coffee, right? I mean, why not? If we're going to have coffee, we might as well do it on the show, eh? Yeah, but you know, what I find a lot of traders doing is jumping between strategies, getting confused, and a lot of people are confused at the moment as to how to get in and out of the trades and how to choose support and resistance. So I'm going to show you what I do with support and resistance, how I choose support and resistance. So when I'm looking for support and resistance in the original way, and if you go back to my very first videos, you'll see that I always showed you this is the way to take support and resistance, rather than trying to choose your support and resistance based off of a 4-hour chart like I do. I'm a very lazy trader maybe, but also because of all the experience that's involved in trading, you kind of know where you are. So you don't need to do this. But if you're a beginner trader and you're starting out, or you've only just got the first couple of years and you don't have that gut feel for what's going on in the markets, then it's rather important to do it this way. And what I would normally do, and you can see what I've done is I've drawn a green line in here and I've drawn a red line in here, just to make it simple. But you have to understand that this is a bigger area than what you think. So what I'll do is I'll go to the day chart and rather take my levels from the day chart. Now, what I notice a lot of traders doing on their charts is they will have big candles like this, massive candles like this, which only gives you a very short period to work with. You might as well be trading on a 5-minute chart. Now, it's nice to see the candles and that sort of thing, but you really want to be seeing the bigger picture. And for me, the bigger picture is actually way down. And you see, if you make the charts a lot wider, you can actually see where the chart's been, where the chart's going, how bullish it is, and what's happening. And this is on the day chart. Now, what I'll normally do is I'll try and take my levels from the day chart. So I'll take a resistance level, put it in there. I'll take a support level, put it down there. What is a support level? What is a resistance level? A resistance level is a level where the points have touched more than 3 times, or 3 times. Just not 2 times, 3 times. Okay, so if it's touched 3 times, it's great. If it touched 2 times, not so great. I can still draw a trend line in, even if I don't have the 3 touch points, just because I can see the trend. But if you've got the 3 touch points, it's better. Now remember this about touch points, and that is, some people will think the more touch points you've got, the better, which is in a way kind of true, but it's also kind of bad, because what you get is if it touches 8 times, then it's been chipping away at the wall. It's been chipping away, chipping away, chipping away, chipping away. And as you know, if you keep chipping away at the wall, eventually you're going to break through. And that's the similar scenario to this. So if it's touched 3 or 4 times, you've got a pretty good level. If it's touched 8, 9, 10 times, it's either an insane level or it's eventually going to break through. It's getting close to breaking through. And the reason for that is these levels are not just levels. These levels are areas where there's a lot of orders and there's a lot of money. Why is there a lot of orders and a lot of money there? Well, you can see it because every time it gets there, it pushes it away. Every time it gets there, it pushes it away, which means there's orders there that are pushing it away. And that's what's actually happening with support and resistance. So when it gets there, it pushes it down. It's not just a line in the sand or a level. Now, what I used to teach people to do is draw these levels in rectangles like this, because what that actually does it gives you more room to move because it's not a straight line. It's a level that it moves into and moves out of, moves into, moves out of. So it's kind of an area. It's not an exact area. It's kind of just an area. But I prefer not to have them in sometimes because it's easier to see where the candles are if they're not there. Now, the same goes for the support. You need 1, 2, 3 touches at least, and then you've got a level. So what's happened here, this is the S&P 500, just for example. This is shot all the way up, and it's come up to this area, and it's kind of creating this range that it's in now. Now, while I say keep it simple, and I say trade with one way only, one edge, one system, it is one system. I don't have loads of different indicators. I don't have loads of different things going on the chart. But what I do have is 3 methods that I use in the system. And that is I trade with the trend, which is the trend is your friend. There's your trend. Or I trade in a range. There's your range, up, down, up, down, up, down. In that range, off the support, off the resistance. Or I trade on a breakout or a breakdown or a break of structure on a trend. So once I've got that in line and I understand what I'm doing there, and I've taken my resistance, drawn it in, taken my support, drawn it in on the daily, then I can take it down to the H4. Now you can draw this in on the H4. There's nothing wrong with it. I actually drew these in on the H4 and they fitted perfectly into the day chart. It's just easier for some people to take it to the day chart and then to come back. While you're on the day chart, by the way, have a look at which way the market's going. Have a look at the candle and see if it's telling you I'm bullish or bearish. Gives you an idea of where you're trading on the lower time frames as well. Now that you've got that, real simple, all you have to do is look at that and say, well, what have I got here? Now, what I want to do is make it a little bit bigger, go up here and say, what can I actually do with this trade? Well, really simple, really. I can do one of two. There's a couple of ways that you can trade support and resistance. The one way is you could just wait for it to hit resistance, take the short, go down, wait for it to hit support, take the buy and go long. Now that's a very simple way of looking at things. But the best way to do it is to actually, if you do hit resistance, don't just take the trade because it could break through. Wait for the red candle to close coming down and then take the trade coming down. Now what a lot of traders will do, especially on the break, they'll wait for a retest before they take the trade. That often doesn't happen. So I just take the trade immediately. It's my preferential way of trading. Now, I had a few questions about this, and the one big one is, is that how you trade? Now, the question is, how do you trade? You see, the point of trading is this. If you take a system from me, from anyone, from this guy, from that woman, from that lady, from that guy, and you get all these different systems. What you've got to do is pick out the best of those systems and try and align. I mean, make sure it's all price action, for example. And then the one trader will say, only trade on a retest, and the other one, like myself, will trade on just a candle, and that'll be good enough for me. But it's my way of trading. So pick a way that works for you, a way that you feel comfortable with when you're trading. Try and pick a trading system that fits into your lifestyle. Don't just copy 100% what everybody's telling you to do, because it might not work for you. There might be something else that you want to add in. For example, you might just want to have the RSI in there. I don't know. Maybe you like it. Maybe you don't like it. Some people trade with Fibonacci. We used to have a chap on the live show quite often last year that only traded with Fibonacci. Great stuff. And would you believe it actually lines up quite well with support and resistance, and it lines up quite well with price action. So if you want to do that, nothing wrong with that. It actually works out pretty well. But what I like is if I have a bullish run, and I've got a bullish run that I'm working in general, along a trend line, it's great because you can go long every time it hits the support, go short every time it hits the resistance in that trend. Or if it breaks through that, you can trade the breakout trade or break of structure, which means it's chain structure and you're going the other way. Now, the interesting thing about that, I use it within a range. So for example, if a trade moves into a range and I've got a resistance and I've got a support, and I'm looking at this and thinking every time it goes off the support, you can buy, every time it goes off the resistance, you can sell. But now I can use the trend to pick up where I can sell and where I can buy. So for example, this S&P 500 is bullish at the moment, moving up. moving up towards this resistance. Now, there's a few things that can occur here. The one is it can break through that resistance, be a breakout trade and move to the upside. The other one is it could be a breakdown. It could break the structure of this support and suddenly it starts heading down. And then you've actually got a very good risk to reward because it'll come all the way down to these levels down here and you'll have a stop loss over there. So your risk to reward would be quite insane on that particular kind of trade. It'll actually be quite good. But on the break to the upside, you actually don't know where it's going to end. It's probably going to go quite high because you take what you do when you're looking for the level, the higher level, which is not occurred yet. But you've never had a higher level. This is the high of all times, and the highest it's ever been. And you think, well, where could it go? Where could it end? I mean, these are questions that are often asked by traders. Where's it going to go? Where's it going to end? Well, it's very easy. You just draw a simple trend line in along the top, along there. That's where it could go to. It could basically go to that trend line, which means it could go to about 7,300 according to that trend line. I'm just using that as a quick draw and a quick example. It's not a perfect line, is it? But it's there, all right? So that's how you work out where it could end up and where it could go. So if it breaks to the upside, you get a break to the upside and it moves up. A lot of people will wait for that retest. You don't have to do that if you don't want to. If you find that every time you do that, you miss out and you've got FOMO and all that sort of thing, because we've all got FOMO, fear, lack of patience, that type of thing, then no problem. Simply take the trade because you know what? Every single trade you take is 50-50. Absolutely every single one. It doesn't matter. If you're going to take a trade, you've got a 50% chance of winning. You've got a 50% chance of losing. That's just how trading works. There's nothing I can do to change that. I don't have a magic pill. There is no magic pill. But what you are going to find traders doing a lot in the market, and this is what we're going to stop in 2026, is going from place to place, from course to course, looking for that shiny tool, looking for that next trading system. Now, the trouble with looking for that next trading system is it's always going to be the same. It's never going to come because the system doesn't make you money. Win rates don't make you money. Only a business plan, only strategy can actually make you any money. Why? Because the actual charts are 50-50. They're always going to be 50-50. Now, I'll take questions because it's important that we get a few questions on this because maybe some of you don't know it. I think a lot of you understand this extremely well already, and I think you've gone quite far with this and you've done quite a lot with this. For anyone who's new here, who doesn't know me, I'm Rob, and I've been doing this for 34 years. So the reason I take a lot of shortcuts is because I've been doing it so long. Now, here's the issue with that. When I'm trying to show you guys trading, you'll see me taking the shortcuts and think, why did you do that? And yeah, it's because of just when you've been doing things so long, it actually puts you back in your place as well when you make a mistake, to be fair. Hope you guys are well and you've all had a wonderful, wonderful, wonderful Christmas and New Year and everything's good. So Lancelot, it's nice to see you. Peter, lovely to see you. And Jeffrey, lovely to see you. So you may have questions on support and resistance. You may not. I don't know. But if you do, feel free to ask them. One of the most important things I've always told traders is if you have the ability to trade the VIX, trade the VIX. Because the VIX is going to make you money. It's the one thing that can make you an absolute fortune. One thing I like to do with the VIX is at the beginning of the year, start buying into the trades at 15. And as it goes up and down, if you're going to draw down, this is the one where stop loss doesn't bother me. Because what I do is I add to this trade as much as I possibly can. Because if you look back, you'll see, well, I can't really go much further back than that, but you'll see that it never very rarely gets down below 10. And it always gives you a spike every sort of period. Now, this has been a kind of long enough period, in my opinion, and I think we're due for a little spike either this month or next month, and that'll give a little bit of profit in there. The VIX always provides a little bit of profit, which is absolutely fantastic. The Bitcoin, an interesting one, because it has hit resistance, and it looks like it wants to turn downwards again. Look at that, it's hit resistance a number of times. Looks like it wants to turn down again. Now, I know a lot of people were talking about it breaking through the 93,000 and heading on up to the 125 and the 200,000 and all the rest of it. And everybody's starting to get like positive about it again. But in general, last week we were all talking about it going down. I'm thinking if this goes down, we might get a nice run down to these lower levels eventually, off the resistance, which will give us a nice buy. And somewhere down the line, you're going to get a nice buy on this Bitcoin, which is going to take us up to the 125, 150,000 or something like that. This is the thing. If this does, you see it's on the resistance line, how many times can it hit the resistance? Like I said just now, how many times can it hit the resistance zone? How many times can it bounce off that resistance zone and go down before it breaks out and goes up? It's picked this area. This area is full of money. This area is the resistance zone. When that money is finished, it goes the other way. Thank you. Merry Christmas and good morning. And I'm glad to have you back on board. It's always great. Like I say, you can see me. I can't see you. I mean, but, you know, at the end of the day, I'm going to try and do something this year where we can have a bit of a get together on Zoom or something. The one thing I noticed about Zoom, though, is it can only go for, like, I don't have a professional Zoom account, so it could probably go for an hour or something like that. But we can figure something out. Maybe I'm thinking of a question and answer session, and that'll be great. But so I've actually put a little challenge on here for the top chat, which if I get 10 of those, we'll do a question and answer session. But I've got to figure the whole Zoom thing out and how we can do it, particularly do it live or whatever the case, or even if we just do it in private. I'll think of something, but that will be great. Either that, or I'll see if Telegram's got that capability, but it's got to be able to carry like a whole bunch of you guys together at the same time on the show. So it's going to be quite interesting to see if we can achieve that or do something like that. That'll be quite good. Yeah, that will be quite an interesting one to see how that turns out. So yeah, Bitcoin, like I say, waiting for that. Let's see if it goes all the way down to the bottom here and we get a decent purchase off the support. It actually hasn't really reached that support. The support's higher up if I look at it. That's actually just broken through that level. The support's more towards this 85,000 as we stand at the moment, which makes this a very, very narrow range rather than the 81,000 that I was hoping for. The range is a little bit narrow on the Bitcoin. Yeah, it's okay. We live with that and we deal with that as we go. Where's the oil? There we go. Oil. The oil trade is for once doing okay. Not too bad. Okay, good, Ruggie. I will. If we do that, it'll be great. It'll be an interesting show. Yeah, Solange long in BTC. Yeah, it's questionable as to where it's going to go, but it is on resistance at the moment. So there's always the possibility it could break to the downside, but it could break out and break through. Just remains to be seen whether it will break out, whether it's going to go back down again. But I am looking for that long-term long trade. I did call it short today and say, look, you could take a short off this resistance. Well, actually what I called is you can take it short or long, depending on which way it goes. Because, yeah, okay, this is oil. Let's just go back to BTC again because I'm back on that subject. But I did say if it breaks to the upside here, long, we're long. If it breaks to the downside through this trend support, short, could be a short. But I would really like to get a long trade somewhere down here and give you quite a nice run on the BTC, probably the ETH as well. Oil is long at the moment, but there is a resistance level that it's developed here at around the 63,000 level. 62945, that's just my line that I've drawn in, a 63,000 level. Round numbers, remember guys, round numbers are so important to people. The people love round numbers. Round numbers are really great. It's human beings. Human beings are into round numbers. We don't work in little points and decimals and things like that. We like to work in round numbers, so pick the round number, 63,000, probably the area. It needs to break through that to be worth anything. I was concerned about the long oil trade holding on with the result of what happened with Venezuela and all that in the story. But it does appear to be holding on okay. So I'm kind of like, okay, because somebody said there's enough oil to go around because they got that oil, but I don't know now, why is the oil price holding up? But it is. So that, everything does things that don't really make a lot of sense. For example, the ZAR is a good example of something that doesn't make sense. Because, I never thought I'd see the day that the ZAR would be down at 1630, the way it's been going here. It's really been a situation where our government's like next in line from the US as far as, getting told what to do does. So I'm quite surprised that our rand's holding out so well. But on that end, maybe the end of the day, if you think about it, this US dollar index is telling us a story. But it's not telling me the whole story, because while we've got this long downtrend, which could have, said, well, that's why your rand is so weak, it's so strong, this has kind of bounced back up. I'm looking at this and thinking, if that bounced up, why didn't the rand sort of follow this pattern? Because the rand pattern is not the same. It's just a straight one down. It's carried on through there. So it's splitting apart here, which is, it makes me think that they know something that we don't know. Maybe they got some kind of information that we don't have. Now I'm talking about the real pros behind the scenes, sitting with the institutional money and all those Bloomberg terminals and all that fancy stuff. If you want those Bloomberg terminals, guys, you must know they're very, very expensive, by the way. You can get the free versions, but the pro versions, they actually cost quite a lot of money. You probably would have seen them if you guys have watched any Bloomberg or CNBC or anything like that. Interesting stuff. So the Japan 225, the Nikkei is extremely bullish, but you'll see I've drawn in this liquid money here, supply of money that's lying at the bottom here. It's coming back to take that money, so it'll probably come back into here and then continue on up. So it's in an upward trajectory at the moment, unless it breaks through that and then comes down and looks for the next level, which is down here. So it's actually done quite well. It's actually doing very well. Come to think of it, we haven't spoken about gold. Who's long on gold? Come on, tell us who's long on gold. Anybody here long on gold? Okay, I've got a question. Hi, thank you for your consistent approach. Question. I have almost become dependent on MCF stochastics together with the support and resistance and price action. Is it a bad idea? Now, I'll tell you something. I traded stochastic for many years, many years. I don't know what readings you're using on your stochastic. I was a firm believer in stochastic and loved it but still do actually. I don't think there's anything wrong with it. But trading stochastic, depending on what kind of inputs you put into it, you might as well be trading the moving average crossover, or you might as well be trading the MACD, or you could be trading an RSI. It's just very much a preference. But what I find the problem is with the stochastic is the lagging indicator scenario. Let's see if I can just is stochastic on here, stochastic oscillator. Okay, so this one, I don't like 14.3. I can't even remember what I used to use, 14 something else. But okay, I'm just going to put this on. There's your stochastic. So for those of you who don't know how stochastic works, think of an RSI, very much a similar pattern. And effectively what you've got is a kind of a moving average crossover scenario. So when it goes oversold and it turns and it moves back up, when the the first line crosses the second line or the second average, then that's when you buy and you sell when it crosses back down. But what you find is generally it's very lagging. Generally it falls behind quite a lot, and it doesn't give you the trades. But sometimes you get a good trade. For example, here you got a buy, and then it went up, came down, went up, and it's now overbought. You see, now here's the problem, because now you've been looking at this gold and thinking, ooh, I want to buy that because I want to get up to there, but it's way overbought, and it's showing you a sell signal on here. If I look at the candles, it's also showing me a sell signal. So this is going to tell you to sell and bring you all the way back down to here again. You get the fast stochastic, the slow stochastic. They do tend to, how can I put this, run a bit fast. They do tend to run a bit fast up and down. But yeah, if you want to trade with that, you can. There's nothing wrong with it. It does the job. It does the trick. I would prefer to just have the RSI, to be fair. You know, I'm pretty good with just having a relative strength index in. Relative strength index tells me where I am. I can draw a trend line in here. But you know, that's me. I like to keep things as simple as possible. And the RSI gives me that simplicity. I'm just looking at it. It's overbought, oversold. That's all I'm looking at. I'm looking for a divergence, and I'm looking for if it's broken trend. So for me, it's still got some room to go to the upside on the RSI, but the stochastic is telling me to go short. Don't start to confuse yourself with trades, because as I say, charts don't have a predictive capability. They never, ever, ever have a predictive capability. You're just looking at certain pictures that will give you an idea so that you can apply your business plan of managing your trade, managing your risk. That's what the important part is with trading, is managing that risk and having a business plan to make more on your wins and lose less on your losses. Then it doesn't really matter what strategy you have, but don't add too much in. Don't add too much in. But there's nothing wrong with having a system where you have a stochastic and then you trade with price action. There's nothing wrong with that. It's absolutely 100%. I went through quite a long period of getting used to being without anything on my charts, because I prefer it now, but back then I would still like put the MACD on, I'd put the RSI on or whatever permanently, because I wanted to see what was going on. I still couldn't, it's like a withdrawal symptoms, you can't get away from it. But if you need it, use it. And if you're comfortable with that, use it. There's nothing wrong with it. I still, from time to time, look at a trade and think, what should I do with this? And then I'll put an RSI on relative strength just to have a look, just to let it tell me, hey, is it overbought, oversold? But I just got to be so careful not to let it confuse me to the extent where I start not taking the trade or start getting out of the trades too early or something equally ridiculous. Hey, Diet Pepsi says John Cruzco has made a living trading stochastics. Check out his YouTube videos. Thank you. You know, I hear what you're saying about John Cruzco. I don't know him, but whoever he is, making a living out of it. And do you know what? Back in the day, I could say I made a living out of it. I traded stochastics, but you know what I did is I had stochastics, I had RSI, I had MACD, I had volume, I had a chart full of stuff on, okay? And it worked. You know, everything works. Like I've said to you guys before, every single system in the stock market, crypto market, Forex market, everything works. Why does everything work? Because nobody designs a system to fail. Nobody designs a system that's not going to work. So whether you're using a stochastic system, a moving average crossover system, a price action system, a Fibonacci system, an Ichimoku system, I've used that as well, by the way. But Ichimoku wasn't so profitable for me. It was a bit slow, but you know, and I used the stochastic system for a while. I made a living out of it. The point being that when I used it, I didn't understand the aha moment that charts won't make you money. When I used it, I was still in the belief that win rates and charts were going to make me money. So I didn't have a proper business plan at that time, and I didn't have a proper realization that you can't time the markets. So I just used the stochastic. I was lucky enough to make some profit. Did okay out of it. It wasn't so bad. It was years later that it hit me on the back of the head like a bat, like boof. Now, hang on. These lines are not going to make you the money. What you need to do is just understand a proper business plan and strategy and forget about all that rubbish. And I did. I kind of took it off my charts. Like I say, it's a bit of withdrawal. You know, you don't want to take it off, but eventually I took it off and cleaned up. And it cleaned everything up for me. It cleared my mind. And then suddenly I understood what the markets were about. It took me 10 years, by the way. Some of you will be lucky and listen to me and figure it out earlier. I didn't know that it's not about these lines. I didn't realize that it's actually about how you structure and make profit on the bigger ones. But a good example of that is now you take a whole bunch of losses on these trades and it's getting irritating and all the rest of it. And then suddenly you have a VIX trade which goes to the moon like that. And that makes you a lot of money. And then you realize what you're looking for is those big wins. You're not worrying about all the little things in between. So yeah, I could say I made a living out of stochastic for a while before I understood the markets though, before I understood what it's all about, and before I understood that you can't time the markets. You can put any system you like in place. Absolutely every single system will give you the same odds, whether it's stochastic, whether it's price action, whether it's Ichimoku, it doesn't matter. Understand one thing about, for example, the markets can remain solvent longer than you can. So at the end of the day, if you trading stochastic and it's way overbought, let's have a look here. Indicators, oscillators, stochastic oscillator. Let's put this in here. Okay, so you're trading with stochastic. You look at this and you go, well, that's kind of overbought and it's crossing over, so I should sell it. Okay. Now, this can remain like that for a long period of time. While that is still going up, this could be going down. It's a bit like a divergence. So look at this. It's been going up, going up, going up, going up, while this came all the way down to here. This came all the way down to the bottom, down to oversold, yet that kept on going up. It didn't really go down. It sort of flatlined. So you had gone short here, you would have made no money. Believe me, I've done this. I've traded stochastic for many years. And then it goes up and then you make some money and you go, oh, it works. Okay. So now you're going to go short again here. And this could carry on going along here, or it could go down, but that could carry on going along here and then go up. Stochastic's just like any other system. It's 50-50. It gives you a line in the sand and says, you can take a trade there. It might work. It might not. You've got the choice. It might work. It might not. It's 50-50. I love the idea that the markets are 50-50. There's nothing wrong with that idea. You just have to get it through your head that that's how it works. And then once you figure that out, you don't need any lines on the chart. You just need to pick a trade. You need to pick a trade, which way it's going to go. Like I've always said to you guys, for example, if you take a trade on every single one of these charts. Okay, let's just take the first 3, 6, 9, 12. You take these 12 trades, and on each one you pick a buy or a sell. Doesn't matter what it is, just pick a buy or a sell. Whether it's a clever buy or a sell, or just a blank buy or sell, or whatever it might be, just pick a buy or sell. And 6 of them lose. So you're $6,000 down because you risked $1,000 per trade. Did I forget to tell you that? You've got to risk the same on every single trade. So now you've risked $12,000 because you've taken 12 trades. 6 of them lose, you've lost $6,000. But on the other 6, you make 2 to 1, and I'm just using that as a round figure. It could be 1.5 to 1, it could be 3 to 1, whatever. Just, you need to make more on the win than you're losing on the loss. So in other words, let's say it's 2 to 1. So on the other 6, you win. That would give you $12,000, which means you would be $6,000 in profit. Now, I'm just using that as a simple example. You might win 3 and lose 9. I don't know. But at the end of the day, what you're trying to do is you're trying to make the biggest win possible on your wins and the smallest loss possible on your losses. Now, what you do with the losses is try not to let them run all the way to the full stop loss if you don't need to. If you see it's invalid, let it go. If you dump $1,000 loss at $500, bully for you. You got out, you walked away, you're looking for a winning trade. What I say is when your trades go into wins, don't dump them when they're $50 in profit for no reason at all when you're risking $1,000. If you're risking $1,000, try and make more than $1,000. Try and make sure it goes into the win. There are times when you're in a winning trade and you just know you've got to get out of it no matter what, and you have to take the $700 profit, then just do it. Just do it, because then you know the market's going pear-shaped, maybe something's happening, and you need to get out of it. I mean, that makes sense, but all I say is try not to dump trades early for no reason at all. And if you can, put trailing stops on them, obviously, because that will give you the most profit. That's just where I am with the whole scenario. Trades open, Sir Lancelot, US dollar, Canadian dollar, I am long. The oil, I am long. I have the Japanese yen short on another platform. I have the VIX open here. I have, what else? Boom, boom, boom. Yeah. Okay. There's only about 3 trades open here. Okay, that's fine. All right. And then on the other accounts, I think just the Japanese yen. Yeah, that's it. Euro, US dollar, I don't have. The Dow, I don't have. Gold, I don't have. ZAR, I don't have at the moment. Canadian dollar, I got. All I got. VIX, I've got. Yeah. So it's January, so, you know, new day. We'll get going. Yeah, as Popsy said here, entry is important, but it's only about 25% of a successful strategy. That is position sizing, stop placement, proper movement to stop when in profit, target profit when not to trade. But the one thing you didn't mention here was keep the loss the same. The important thing is to keep the loss the same. You've got to keep the loss the same on every single trade. What I find a lot of traders doing is they'll manage the trade. They'll put the stop loss in place. They'll take the right entries. They'll do everything that you're supposed to do except keep the stop loss the same. And what you're doing when you don't keep the stop loss the same is this. You are psychologically choosing which trades are better than others. So you're saying, I like trading the S&P 500, so on that one I'm going to risk $5,000, and I don't like trading Bitcoin, so on that one I'm going to risk $1,000. So you know which one's going to win, don't you? Okay. The Bitcoin's going to win, and it's going to win you $2,000, and the S&P is going to lose, and it's going to lose you $5,000, because that's the way of the world. Psychologically, if you're choosing different stop loss amounts on different trades, you are going to make conscious decisions as to which trades are better than others. And you yourself should know that that's never going to work, because you're always going to get it wrong every single time. Because the most exciting trades are usually the ones that shock you and go, oh, you look at it and think, how's that even possible? Okay. But if you keep the risk constant and you keep the risk the same, then that doesn't matter. So as I explained to you earlier, if you take 12 trades here and you choose buy and sell on these trades, doesn't matter which way, 6 of them lose, 6 of them win. As long as you're making more on the wins, then you're doing okay as long as your risk is managed to the same amount on every trade. But if you take these 12 trades and you say, I'm going to risk 5,000 on that one, 1,000 on that one, 500 on that one, 10,000 on that one, you know you're going to have a problem, because the ones that you picked out that are your favorites are the ones that are going to hurt you, generally. And then when that one hurts you, it normally ends up with a blown account or a big problem. The traders that stay in the game are the ones that manage their risk correctly. The ones that manage their trades, the ones that have a business plan. Because if you don't have a business plan, you are going to fall short. Everybody's got a business plan for absolutely everything. And that doesn't just include, for example, trading. It could be making a hamburger, for example. I'm going to go and make a hamburger. Believe me, you've got a business plan. You think, well, I need rolls, I need burger patties, and I need a frying pan, and I need a stove to cook it on. So I'm going to go down there, and I need some lettuce and tomato, and maybe some whatever else you put on there. And there's your business plan. You've planned this whole thing out, and then you've got to know how to cook it, right? Simple thing like cooking, you've got a business plan. I don't mean you have to write it out like 1,000 pages. It's just got to be in your head. And our business plan for trading is a simple 3-step plan in your head. Make more on your wins, lose less on your losses. Very easy. Manage the losses, keep the losses the same. It's not rocket science, but you've got to have a plan. If you're going to open a business, if you're going to open a shop on the road, the first thing you're going to ask yourself, the first question you're going to ask yourself, and this is a question nobody asks themselves in trading, is this really what I want to do? And what's my ultimate outcome? What do I want to gain from this? For example, with trading, do I want to put $10 in and make it grow for the rest of life and I don't need anything from it? Or do I want to make a living from it? So then the next question you've got to ask yourself is, well, how much capital do I need? Because there's a massive difference between how much capital you need to invest and grow an account as to I want to make a living from the account, because that's two totally different ball games, isn't it? One's making a living and the other one's just, I'm going to grow this $5 into $5 million. Yeah, so I don't need any money from it. I just want to grow it. But if I suddenly want to do this as my job and I need to make money from it, that's a completely different ball game, isn't it? Suddenly I'm now looking at this as, wow, actually I need quite a lot of capital to do this. And if I don't have the capital to do this, I'm going to be in a lot of trouble. So, if you need capital, then perhaps the funded accounts are the way to go. Because as I've told you guys before, in 2024, I wouldn't touch a funded account with anybody's money. I thought they were all scams. But then in 2025, I realized and I woke up to the need for prop firm accounts. I actually woke up and saw, hang on a minute, they fulfill a process, because people go on a demo and then they take their hard-earned money and they throw it in and they lose it all. So now you've got something in between. And there's those people that don't have large sums of money and a large amount of them. I realized that as well. That's something that everybody overlooks. Not everybody's just got a couple of $100,000 to throw at the market. I see many of these traders pointing out to you, I made $170,000 on the market today. I lost $20,000, or, stuff like that. Understand this. To do that, you've got to have a large capital amount invested. You've got to have a large capital amount to do that. You can't make $170,000 with $1,000 risk. It's not going to happen, right? So if somebody's telling you they made $170,000, they've probably got a $500,000 account or something. So the insanity of it is that people think, oh, I can do that with $1,000. You can't do that. That's not how it works. Interestingly enough, since we're here, I will go and show you, hopefully I can, let's take you to the news page. And I'm just going to show you this besides the news. You can get, I've got funded trading account links in the description below. and you can get like an EIGHTCAP account or a funded trader market, something like that. And you can, if you don't have an account, you can get it from them. And these guys have now brought out these day trader challenges, which you're all going to lose. All of you are going to lose this because, you know, you put in a stake and you tell them how much you want to win, and then they give you this profit at the end of the day, 5 times, 10 times. You know, you choose your stake, and you can trade for an hour, 2 hours, 4 hours, 8 hours. It's the same as if you've got an account anyway, okay? And you can try and make money for the day. You're all going to lose that challenge, probably. Then you get normal phase challenges, which you can take as well, right? So you got all these challenges that you can take, 1 phase, 2 phase, day trader challenges, right? And they cost different amounts, and you can get into those. And if you're new to trading, you probably lose those as well. But it's probably better than losing your own money at the end of the day. So if you want an account like that, use my link. You probably get a great deal when you go in there. But like I say, they're a necessary evil. I found that they're a necessary evil simply because so many people just don't have the money to get into the markets, and that's why they're useful to everyone. Mystery trader gets $400,000 plus windfall on Madura's capture. That's interesting. Bitcoin hoarder strategy reveals 17 billion unrealized loss in Q4. Blah, blah, blah. The usual news, okay? I just thought I'd go there and show you guys that while we're here, for those of you who haven't seen it already. But, you know, a lot of people will ask me, for example, do you trust these guys and whatnot? No, of course not. I don't trust anybody, to be fair. But they're a necessary evil. And like I say, there's so many people that just don't have the cash or the capital to get into markets, and they think they're going to make a living out of it. If you're planning to make a living out of trading, make sure you can. You know, for the first 2 years, it's actually going to be really difficult for you to make any money. Whether it's funded trading or real cash, it's going to be difficult. Where the belief comes in is you believe that because it's leverage trading, that you're going to come in and you're going to somehow be able to turn this into a huge gargantuan sum of money. Where can you go in the world, take your money, invest it, put it in something, and within 12 months it's doubled? Probably nowhere. And you come to the market and you don't only think you're going to double the money, you think you're going to quadruple the money or make it 10 times more than what it was within that 12 months, if not more than that, 100 times more. I don't know why people believe it, but they do. Now, it is theoretically possible, as I've told you guys. It's very theoretically possible to take leverage trading, to take an amount, put it in the market, and then to trade the full leveraged amount on every single trade and try and take a position on every single trade for a profit, and try and take that into, it's the snowball effect where you double it up on every single trade. But the best traders in the world have tried it. They normally get to trade number 5, number 6, which is top. That's your best traders in the world, 6 wins in a row. Wow. And then the 7th trade wipes everything out and they're back to square one. So it doesn't work. Because nobody can, I don't think anybody has ever managed to achieve the 10 trades yet. Here's the NASDAQ for those who are interested. Interestingly enough, I mean, we don't need this on top here. We can take that out, actually. And the NASDAQ is, yeah, I did break through this level. Actually, I think what we need to do with the NASDAQ is just take this down a little bit. Take that level down to a realistic level, which is actually much further down. Yeah, that's more realistic for the range. And also on the top here, that's much more realistic for the range. Now, you got to move these things around from time to time. So that makes the range a little bit different. The reason I got 2 bottoms here is because there is another big bottom at the bottom here. And then we just have a look at that. That opens it up nicely. It also puts it in the middle, Cyril. And then if you're looking for where the trade is, I mean, you could go with that, or you could make it a little bit shorter. Just put it over there. and just see if it breaks through to that side. Ah, there we go. Okay. Always tricky, bring it down there. Oh, okay, doesn't look too bad. Looks a bit bearish at the moment. Okay, let's see what we got in the way of questions. FTMO actually got a swing trade challenge. You know, there's a lot of these guys that come out with challenges and they come out with all these great ideas and wonderful, weird and wonderful ideas. They're obviously trying to make money. Somebody asked me the other day why it would have any effect on them for you to lose. And you know, if you have an account and the size of the account and why it would be beneficial for the broker to see you lose. Now, for a broker that's got a client with a cash account, there's no benefit in them seeing you lose. They'd rather keep you as a client trading and paying for individual trades because each trade gives them money. But I think for the prop firms and funded accounts, for them, they prefer for it because if you lose, you have to pay them. If you lose, you have to, you know, buy another account. And I think that's where most of their profit comes from because most traders lose. And it makes sense. I mean, if you look at the market and you see that, I mean, that EIGHTCAP, they actually mentioned that 83% of traders lose. That's probably an average between sort of day traders and swing traders, for example. So it's probably in between there somewhere because I know the swing traders about 75, the day traders 99% loss. And if they know that they've got that kind of loss rate, that many people are going to lose their accounts, then they know they're going to get people repurchasing accounts or buying new accounts all the time, and they're never going to have to pay out. So, you know, they work on that basis that you're going to lose your account. I believe so anyway. I don't think any of them are on the up where, you know, it's kind of like, oh, you know, you're trading for them and they're going to pay you for that or whatever the case. Now, I think it's all about you losing your account, and that's important to them. Whereas on the cash accounts, they actually want you to keep the account because as long as you've got an account, you're paying them to have that account and you're paying for each individual trade and swaps and all that kind of stuff. Best way to be a professional trader is not to have to take a trade. Trading is a supplemental income to a good passive income. You see, when you call it trading, I call it investing. For example, I have the investment account, which is there for that, right? So you don't need to trade. In other words, you buy, you set, you forget. It's a bit of a Warren Buffett principle. You buy, you set, you forget. And if you're buying shares and you're holding them forever, they will go up eventually. They will pay you dividends over time. The S&P 500 alone just keeps going up over 100 years. So if you've got 30 years to wait, then you're good. That's how it works. Trading is something different. Trading is where people are, you can trade with one-to-one as well, you know, spot trading if you've got the money. If you're a multi-millionaire and you don't need leverage and you don't want to trade with leverage, you can take one-to-one trades, but one-to-one trades take time to make money, so you get leverage trading, which makes it so much more fun. But yeah, you can take the one-to-one trades. Trading is when you in and out of trades in a much shorter period of time, which is why they call day trading. They call swing trading, which is actually position trading. And then you get investing. Investing is set, forget, leave, forget about it. It's going to make you money no matter what. It's always going to make you money. Trading is trying to time the market, and you cannot time the market, which is why we put the strategy in place, which make more on the wins, lose less on the losses, because you cannot time the market. But now with trading comes leverage, and then you get the leverage into the trading, which means you can't sit on trades forever. And it makes it slightly more difficult to make the money because you're trying to time the market and you cannot time the market. So if you're looking to grow an account, it's probably more like investing. But if you're looking to grow an account, you can trade and try and grow the account and grow it slowly and but surely and patiently. A good professional trader or a good long-term trader will be patient, and they will take their time and they'll grow the account. A person who's desperately trying to make income will make huge gargantuan mistakes. They'll get in and out of trades too early. They'll revenge trade. They'll have FOMO. They'll have impatience. They'll have all the things that you're not supposed to have. Generally, you can see when a trader is desperate to try and be successful. So long-term trading or trading to make either supplemental income or just grow an account, that's okay. That won't be too difficult for most people psychologically. Although losing money can be psychologically damaging, especially if it's your savings. Whereas trading for a living, that becomes insanely difficult. But even if you're just trying to build an account, let's say you've got $100,000 and you want to turn it into $1 million over time. And you invest it, and that's all your money that you've got, all your savings, and you've put it in there, everything. You don't have more, let's say. If you start losing $10,000 on that, it's going to be insanely painful because you've just reduced your $100,000 to $90,000. You're not going to want to get out of that trade, number one. And number two, it's going to psychologically damage you because you're taking loss. And if that gets to 50,000, you've lost half your money. It's even worse. Gets to 60,000, it's disastrous. You've only got $40,000 left of your $100,000 savings. Suddenly the world starts to change and the picture starts to change for you. So even if you're just trying to create supplemental income or just grow an account, if it goes against you, it can be quite painful. Whereas if you had $1 million and you took $100,000 and said, I'll invest that and try and grow it, then that entire amount is only 10% of your total wealth. So even if you lose the entire amount, you've only lost 10% of your entire wealth. That makes a difference as well, because psychologically, there's a different hook. So just saying that, just it depends on the person, depends on your threshold. It depends where you want to go with this and where you want to end up. So watch out for that. For those of you trying to make a living out of it, wow, it's a difficult, tricky game. A really difficult, tricky game. It's actually better to have another income coming in when you're starting out, particularly. If you don't have another income coming in when you're starting out trying to do this, could become insanely difficult for you. Could become quite a big issue. Because you're going to start desperately looking for money to pay those bills. What I would say, and what I've always done over the years with that type of thing is said to myself, all right, here's money for the year. This is going to get me through the year, and this is going to be for trading. And then you trade with that money for the year, and then you keep the money that you're living on completely separate from your trading. And that way you're not desperately trying to get money from your trading to supplement what you're living on. Don't need to do that anymore. The investment accounts are there, that sort of thing, incomes, what have you. So I don't even bother doing that anymore. But in the past, when I needed to do that, that's what I did. Separated that from the trading account. Yeah, now, and obviously now, if I did start withdrawing from the trading account, then it starts to become a tax problem as well. Blue Mango, yeah, how did you not know we were back today? Of course we're back today. Look, here we are. We're back. I'm back anyway. And I can't see you, but you can see me. That's the main thing. Good to have you back, Blue Mango. Nice to see you. Happy New Year. FX Trader says, day trading is the most difficult type of trading. The beginners are encouraged by the brokerages who do it, so they will lose all the money. Particularly, I believe, the funded accounts and prop accounts, FX Trader, I believe they try to get them to lose. So they push them into this fast trading, this like those day trader challenges, pushed you into that fast, quick trading, 1 minute, 5 minute charts, knowing that they're going to lose and they have to buy another accounts. They're constantly selling accounts. Besides that, yeah, even if you've got traders with cash and that sort of thing, they tend to lose it in those first couple of years, because day trading, 99% of traders lose money. Nobody believes me. A lot of people get upset with me when I say it's 50-50. A lot of people get upset with me when I say day traders 99% lose. But unfortunately, that's the case. And they get the guys in there, they get into day trading, and they lose because it's insanely difficult. You know, even guys that have been trading for 30 years like myself, they struggle sometimes with that 1 minute, 5 minute trading because you struggle to get it right. You really are calling on a 50-50 basis, particularly on a 1 minute and a 5 minute chart. How can you possibly know which way it's going to go? You know, you're looking at a chart, and you're saying it's going long and you're buying, or it's going short and you're selling on a 5-minute bit of information, which could just go either way on a whim because somebody feels like it's going to go that way. Always, you know, if you look at a chart and it says on a 5-minute chart, it's going to go that way, definitely going to go that way. 5-minute chart, right? So there's your 5-minute chart. You look at it and you say, well, this is going to go short for sure. Some guy walks into the market with a whole bunch of money and he says, I'm going to buy, and it goes long the other way. And in seconds, it goes long on a 5-minute chart. There's no way around that. You don't know that's going to happen, that some pro is going to walk in and stick a whole bunch of money in there and turn the whole market around. You don't know that. So, you know, why people think that they can predict, I do not know. Maybe they're soothsayers or they have crystal balls at home. Maybe their mother was a fortune teller. I don't know. You cannot predict the market. You can only manage it. You can only manage what you've got. So when you take the trade, so the initial part is just taking a trade. And the difficult part is to take the trade. So you look at it and you think, which way am I going to go? Which way am I going to take this trade? How am I going to take this trade? And you want some assurances within your mind that you're taking the trade the right way. So what do? We design systems around this and say, well, now I'm comfortable. Now I know which way I want to take the trade. You could take this whole chart out the way and just use these numbers. But imagine trying to take a trade based on just those numbers. Pretty difficult, right? So what you want to do is you have a chart which tells you, look, it's going that way, or it's going that way, or it's doing this, or it's doing that. Gives you a line in the sand, gives you something to work with. Now you think, okay, I know what I'm doing. I'm going to buy this. It's going to go up. And now you've put a whole bunch of systems and things in the way so that you can stop yourself from going that way, or there's a resistance or a support, or, you know, a trend line, or whatever the case. You put all these things in place to try and tell you or convince yourself that it's going to go that way. So when it goes the other way, it can be quite psychologically damaging and, you know, shocking because it didn't do what you expected it to, but it helps you to take the trade. The point being that once you've taken the trade, once you're in, you've taken the trade. Now you've leaped in, you've gone in there, I've taken this trade now. This is my trade. I'm in, I'm taking this trade. And you're trading and you're in there. Now the point is manage it. Now the point is manage it correctly. And if you took the trade right from the first place, in other words, same loss on every trade, you took the trade correctly. So now you know you're in the trade, you've taken the trade correctly. Now all you got to do is manage it to the point where you're successful, where you're making a success of the trade, where you're not messing it up, getting out too early. You know, it's easy to get out of trades too early. It's easy to dump trades too early. It's easy to move stop losses away, not adhere to your stop losses. It's easy to dollar cost average in a loss and try and get yourself back to zero and lose more money. There's so many mistakes that traders make in trading, and it just gets worse and worse and worse. Okay. It is a tax benefit in the USA to buy one micro ES with $35,000 than to buy SPY. Interesting. I didn't know that. Okay, that's interesting. But then I don't live in the US, so, you know, that's probably why I don't know that. Thanks, FX. Yeah, I do tell it like it is. A lot of people don't like that, but yeah, I try and keep it that way. Keep it real, eh? Keep it real. Keep it real. If you do the math, your own money would work also fine if you use the compound effect. It's my next step. That's what I always tell people is if you're brand new and you've come into trading and you've got a demo account and you've just done a course and you've learned how to trade. I'm going to trade now. I'm a trader. I know everything. I've got all the abbreviations. I can tell you everything about the stock market. In fact, I can tell you about the Scotsman who invented the stock market back in the day. Interesting he did that. Why did he do that? He invented a monetary system effectively. But anyway, he went in there and he invented the stock market. Brilliant. Absolutely brilliant. And you know all this stuff now. You come home, you think, I'm going to trade now. I'm getting into trading. Now, in the old days, back in the day when I started out, we didn't have leverage trading. So we just took our bundle of money, we put it in the market. So effectively, all you could lose was your bundle of money. And, well, you could only lose a percentage of it, really, because it wasn't leveraged as such. But then they brought in leverage trading, which made things insanely dangerous. And let me tell you why. It's because now you've got $100,000. It's your life savings. It's the only money you've got in the world. And you're, I'm going to go and trade this because I can take $100,000. I can put it in the market and I can trade $1 million. And if I look at that logically, if I make 10% on $1 million, whoo, I doubled my money. I've just doubled my money just like that. Poof, just so easy. So surely if I take $100,000, which is my life savings, the only money I've got, and I put it into leverage trading, and I go and I make 10%, wow, I've just made 100% on my initial investment. And I can't do that anywhere in the world, not in 12 months. I can't do it. In fact, I could do this in a month. I could make 10% on my investment, and I could turn my $100,000 into $200,000 just like that. So the first thing you find out is when you put the $100,000 is you can't really trade the whole $100,000 because that's just not going to work. So you sort of trade $50,000 of it, right? Problem being, you lose it. That's the problem, because you don't know what you're doing. You've never really been in the market, and psychologically you're wrecked because you're trading with every single cent you've got. So you get into the market and then you don't make that 10%. You rather lose that 10%, and that's normally the case. And you lose that money. And it just gets worse and worse and worse. What a lot of people don't understand with those cash accounts is when you've got a cash account with a broker and it's leveraged, if you go in on a Friday and you've got $100,000 risk on there, and let's say you've only got $100,000 in your account, but you've got $100,000 risk on that trade, and you go into the weekend, and over the weekend war breaks out, something goes wrong, Donald tweets something or whatever the case, you wake up on Monday morning and your account's $500,000 down. And you think, well, how is that possible? Because I only had $100,000. Well, unfortunately for you, it is possible. It's called a margin call. You're going to get a phone call at about 10 o'clock in the morning, maybe 9:30, depending on how desperate your broker is or how many people they had to phone before you. And they're going to say, we want our money because we got the 100,000. We need another 400,000 off you because you've lost. And the market's still going down further. So you might be losing another 100,000. So you might owe us 500,000. So you better pay now. It's a margin call. You don't want that phone call. You never want that phone call. Can't happen to you with funded accounts. Okay, funded accounts can't happen. It's never going to happen on a funded account. But on a real account, it can happen. And believe me, I've seen the crashes, and I've had mates that have had the phone call. I've been very fortunate not to get the phone call. And I've been very fortunate to always be lucky to call those weekends and see them coming. And normally you can see them coming because you can sort of start seeing the hype going on and the red lines and the stuff happening on the Friday afternoon. And I normally become very nervous when that happens and start just selling everything out. No matter how much of a loss or profit I'm in, everything's gone. Okay, apart from the investments, I don't worry about that because crash or no crash, the crashes go 30 to 50%. And so that's just one-to-one money, and it drops down a bit and then it goes back up again once it settles. So investments I'm not worried about because you can never time investments. But leverage trading, that's a big problem. That is a really big issue in your life, and you need to be careful how you approach that and what you do with it. Word of warning when it comes to leverage trading. Look at this Germany 40, how it's broken out nicely and going to the upside. So let's you do the math, your own money would work. Nate Diapers, USA is stingy on leverage trading, can't get more than 50 to 1 in Forex. Most of the guys are 100 to 1, but some are 500 to 1. Sure. You don't have to top up if you get a margin call. All they do is sell off your equity. Also, if you have the equity, but if you don't have the equity, that's where the problem comes in. You have to pay. You know, there's most guys who get caught by this will get the phone call. It's because they don't have the equity. If you've got the money in their system, they'll take it. They'll sell off your equity, they'll take the money, and that'll be it. But if you only had 100,000 and you owe 500,000, that includes equity. You owe them 400,000. They're going to ask for it. They're going to ask for that money. You know, it's easy to say, oh, they'll sell off my equity, but that's also painful. Even if you do have the equity, if you can cover it, it's not going to be fun. Even 50 to 1 is still tricky. You know, most of them are 100 to 1, right? 100 to 1 is the general consensus. So you take $100,000, you can trade $1 million. But like I said, you can take $100,000, trade 500,000. Still quite attractive. Still quite attractive because you can take 100 and trade 500. Still quite attractive. It's not a bad thing. Eh? People will be sucked in by that quite easily. That's what sucked me into leverage trading, was the ability to make a bigger profit, the ability to get in there and make those profits. And you know, you don't think about what the losses are going to look like, do you? You don't think about all the bad sides. You only think about the good side. That's what catches most people out. You got to understand that most people get caught out by the whole picture of, I'm going to make loads of money, and then they find out that they're not going to make loads of money. That's the interesting one. Interesting though. With Trump in office, I don't hold any highly leveraged contracts over the weekends. You know, I always advocated to everyone that you should sell on a Friday, but I also don't do it. You know, I hit Friday afternoon and I check the environment out and I have a look at what's going on in general. And if it looks okay, I take the chance. I take the chance, but not on everything. Generally not on the indexes. On the indexes, I try to dump. Unless I'm short. If I'm short, I'll kind of like wait towards taking a chance on short. Short, I'm happy to take a chance on. But long on indexes, I'm very, very cautious over the weekends. Forex, I'll still look at, depending on which Forex it is. And I'll gamble on that. And commodities. Commodities also. I'm kind of just ear to the ground, see what's happening. But I won't be heavily weighted over the weekend. And I usually on a Friday, I don't like buying into trades on a Friday, because on a Friday, I know I'm sitting with the trade. I prefer to buy into the trades earlier in the week, Monday, Tuesday, Wednesday, take the trades. Thursday, I'm starting to become reluctant, and Friday, I try to stay out of it and just enjoy my day. Because if I buy on a Friday, pretty much got to get out on the same day, and with swing trading, that's quite difficult. So unless I'm comfortable with the whole world politics thing, and I think, well, you know, doesn't look too bad, looks like the world will survive this weekend, no banks going bankrupt, nothing really happening, I'll take the chance. Because what I found in all the previous crashes, and this is just luck, but in all the previous crashes, what I found was pretty much you had quite a lot of fair warning if you can read between the lines. You get quite a bit of fair warning. You can see what's going down. You can actually see what's happening. You get the feeling for it. You know, you know something's going down. And you can sort of jump ship just before it happens. But yeah, like you say, with Trump in office, I don't hold any high leverage contracts over the weekends. I get that, because he's volatile. He does strange things. And he does strange things. But I've noticed most of the strange things that he's been doing during the week. So maybe over the weekends he kind of relaxes, I don't know. But most of that stuff's been happening during the week, and there's been quite a lot of fair warning before it happens. even this little Venezuelan thing, there was quite a lot of fair warning before it happened. So you pretty much knew before the weekend, this is going to happen. Maybe I should be careful with what I'm trading, you know? And then on that front, you know, I actually did hold the oil. I hold the oil long because on that front, I thought, well, whatever happens here, oil should be okay. Should go long. I didn't want to be short on it, that's for sure. But the US 500, there was no chance. I mean, all these guys that bought on Friday on the basis of, oh, no, you know, the world's going to, you know, going into this thing, America's just winning and all the rest of it. Who knows what could have happened over the weekend? You know, the indexes, it's, yeah, I agree. You know, if you can get out of it for the weekend, do so. It's best. Yeah. Exactly what you said there, not having enough time for the trade to work out. That's basic rule. You know, if you can see the trade's not going to work out in your required sort of setup time, that's why I take so few trades on a Friday, is because I know most of those trades are just not going to work out in time. And then you're going to be sitting with this thing over the weekend because you want to sit with it. You don't want to really dump it. And then you're not making the money. But I do break the rules myself, but it's very much with my ear to the ground. So that said, like I say, I've been lucky in the past and hopefully I'm still lucky in the future with that. I've often had my ear to the ground and what's happening and what's going on. Everybody was talking about big wars this week and all the rest of it. Got my ear to the ground. If anything happens, it happens. But I don't know. I don't think so. It's amazing how well the Germany is doing. The DAX is doing really well at the moment, and it's very, very positive. Does look decent. I've got to say, it does look decent. Did that just go sort of off? Well, at least the connection's better. Last year we had a situation where the connection just disappeared while we were on the show. That was weird, eh? And yeah, it is kind of weird. It is kind of weird. So it took me years in the market to realize that you really only need one setup. You don't need 25 different indicators. You don't need 200 different systems. You don't need all these different things. And the one thing you've got to realize in the markets, and you will realize this over time, is you're not trading candles. You're not trading lines. You're not trading anything like that. What you're actually trading is human beings. Behind every candle, behind every trade, behind every level is human beings. And those human beings are money. It's money that's been put into the market. And these are orders in place. Institutional money. Retail traders do not move markets. We're not enough. There's not enough retail traders to do that. The market is moved by institutional money, large sums of institutional money, not small sums, large sums of institutional money push these markets around. They push it up and down. Don't think that retail traders are going to move this market around in any way, shape, or form. So if any retail trader is trying to move the market or trying to say to you they can move the markets, they are not. They have no chance of doing that. I am long on the US dollar, Canadian dollar, but I'm a little bit concerned about this double top that's developed here. That does seem to be an issue. And if I draw another line in here, what I'm going to do is I'm going to leave that line there. And what I normally do in a case like that is I'll make that one yellow so I can see what's going on. That's a double top that's developed. Not great. We'll see. Good chance this is going to come back down again. Don't like that. Don't like that, especially since we're in a loss on that. Okay, we'll see what happens. See how it goes. See if it decides to go up. Yesterday I called this short, and I thought it was going to break to the downside because it actually broke through the support. It broke through the support completely. Unbeknownst to me, big retest, big green candle back up, and she shot back up again. Oh well. Then hit this trend resistance, and now it's coming back down again. So it looks like it's bouncing off that trend resistance. So the bearish trend remains intact, but there is a level here that it had broken through, then it's gone back through again. So it remains to be seen whether it will stay in that range now that it broke back into it, or whether it will break to the downside again. If it breaks to the downside again, if it breaks through this, pushes to the downside, we're talking about a heavy move, because then it's confirming the move to the downside. So let's just see what this does. But what confuses me about the euro US dollar is the Great British Pound US dollar normally tends to follow suit. And what we've got with the Great British Pound US dollar is it's broken to the upside. It did bounce off a trend support, by the way. And it bounced up, broke through that resistance, and has come back to retest, which means this could be going long. Now, if this is going long, then the euro US dollar will also go long. Isn't that interesting? If the euro US dollar goes long, let me just have a look at that. It's bouncing off the support. That goes long, and then it's going to break through there and go. So that's, you can play the two trades off against each other and see how they're going to go. But if I look at the US dollar index, it also kind of looks like it wants to go long here. Because if you take that, it does look like it's running along that level. It looks like it wants to pick up a long trade. US dollar also has an interesting level right there. That one needs to be green so that I can see what I'm doing. Oops. Yeah, that's your dollar index. So your dollar index is bouncing around at the moment. It's got into a range, could resolve to the downside. One better hope that it doesn't. But if this keeps on going down, you're going to move into a commodity super cycle, which means gold and silver and all those things are going to be quite an interesting long-term buy. That was on the H1, by the way. So I'm just having another look here. Let's put this on the day chart. Just want to get a better picture of this. You see on the day chart, this needs to be much higher up. Yep, that's better. That is better. And this one, actually, that's okay. We can leave it like that for now. All right, H4. So let's see what we've got. Okay, cool. Interesting. Dollar index. The dollar index bounces back up again, then everything's going to change, including the ZAR. That will also turn around, bounce back up again as well. So you're going to get an upward trajectory on that as well. Cool. Oil, yep, definitely on the move to the upside. It's got some space to go. I think the oil's got a bit of space to go. I think it'll go quite decently to the upside and head up there. So on that note, guys, I hope that my trading information and my trading training went well today. And I hope it gave you all the insight and all the information that you could possibly need from trading today, and that it helped you in some way or another. And if it did, then subscribe. I mean, if you've watched the live show this long and you're not subscribed, I don't know. Make sure you've liked this video. That'll be fun. Like the video. That always helps. It's good for that. And like I said, I will look at Zoom sessions in the future. We'll do something like that as well. For those of you that haven't joined the members area, do that too. That's also quite useful. But guys, thanks for watching. And On Thursday, I'm going to come back with another live show, but at 12 o'clock GMT plus 2, not 11 o'clock GMT plus 2, and not 2 o'clock GMT plus 2. This time it'll be at 12 o'clock GMT plus 2. I did one last time, and it worked a little bit better. I was bringing them out at 2 o'clock GMT plus 2 because the USA were watching, and these days they're just so late and whatnot. It's not really working out for this side. So I'm just doing them 11 and at 12. And those two shows are pretty close to each other and pretty much at this time of the day, which is great for everyone. I hope that helped you. I hope the information was good for you. It's been good seeing you guys again. It's been, well, I can't see you. You can see me as I've said before, but it's been good having you guys here. Let me say that. It's been good having you guys on the show. And I hope to see you guys or have you guys on the show again on Thursday, where we continue on and we look at the next topic. I'll think of another fantastic topic for all you guys to get along with and enjoy, and we'll have some fun. Guys, thanks for watching. Until the next one.